Okay, so far in this chapter 4, we have placed items, transactions in a journal in chronological order. We have transferred them or posted them to the general ledger so that they are by account, and we've also learned how to calculate the new account balances. In this problem, practice 4 for chapter 4, they give you a trial balance. So once you have posted to the ledger, the next thing that you need to do is to create a trial balance to make sure that the debit side equals the credit side, the left side equals the right side, so that you can find those accounts that may have errors in them before you move on. In order to keep from scrolling, what I have done, we have one that's equal, our trial balance equals here, so I have clipped that and printed it for myself so that I can refer to it as I complete these statements. So we're now ready to create our financial statements, which we will start with our income statement. The income statement follows the concept of accounting to match revenue with expenses for a given fiscal period. So for this, in this case, it's for the month ended July 31st, 2016. Income statement has revenue and expenses for this type of business that we're looking at. So we first put the classification revenue there, and then we select our revenue account, which is painting fees. Now in these cases, we only have one revenue account, although many businesses today do have more than one means of making revenue. For instance, beauticians have the means of doing hair and performing those sorts of services, but then they also sell items such as hairspray and shampoo, etc. Okay, so the revenue, if you look on the trial balance that you find above there, is $36.98. And we put it in the far right column because we don't have but one item, so we don't need to total it. The next thing is your expenses. Income statement just shows your revenue and expenses. So we list the expenses in the order that you find them on your trial balance. So the first expense is wages expense, and the amount is $935. The next expense is rent expense. Again, you're getting this off the trial balance. The next expense is telephone expense, $44. Transportation expense, $53. Utilities expense, $63. And finally, miscellaneous expense for $27. And again, I listed them in the order that I found them on the trial balance. Then I want to total my expenses since I have a number of them, more than 2. So I'm going to open my calculator, make sure it's clear, and it's 935 plus 283 plus 44 plus 53 plus 63 plus 27 equals 1405. It's not a bad idea to add it twice. In fact, most accounting textbooks will tell you should always confirm your answers. It's easier than finding the errors later on, and it's easy to make input errors. When I worked in accounting, I always had to run the daily receipts at least twice until they equaled. And it equals 1405, so I'm good. Okay, then I find my net income or net loss. The way I know if it's a net income is if my revenue, what I've brought in, is more than I've spent out or paid out, 1405, and it is, so this is a net income. So I'm going to calculate that net income, which is $36.98 minus $14.05 equals 2293. And I need to label that net income. And that's what we always hope for, is a net income. And that's your income statement for month ended, and it includes your revenue and your expenses to determine if you have a net income or a net loss. The next item, and we do these in order, and you'll see that as we go why we're doing them the way we are. And the next one is your statement of owner's equity. In other words, what kind of changes have occurred in the owner's equity account, very important to your business. We do it right after the income statement because we have to show those effects of the income statement, the net income. So we start with the beginning capital on July 1st, and we should be able to see that we're going to start with 0, and then we add any investments during July, and so we're going to show $32.85 as an investment during July. So your total investment is $32.85 since you're adding 0 to that. Okay, and then your next one would be your net income for July, which we get off up here, $22.93. And next would be minus your withdrawals for July, and you can get that from your trial balance. Your drawing was $527. And your increase in capital, or it could be a decrease, but in this case it was an increase. So we're going to clear $22.93 minus $527 equals a net increase of $17.66. And so the ending capital at the end of the month would be $32.85 plus that increase of $17.66, $5,051. Okay, then we move on to our balance sheet. A balance sheet shows what kind of condition your business is in on a specific date. And so it shows your assets, your liabilities, and your capital, because all of your other accounts are closed. All your temporary capital accounts such as fees, expenses, and drawing are closed. So it only shows the assets. So we'll start with cash. List them in the order that you see them on your balance sheet. Do not take all your amounts from the balance sheet, because some of them will need to come from your statements that you've just completed. Okay, the next one's accounts receivable is an asset, so that one's $1129. The next one is supplies, and it's for $789. And your last asset is paint equipment, and it is $945. Okay, and you total those. $4,300 plus $1129 plus $789 plus $945, and that equals $7,163. Okay, then on the right side we have accounts payable, and you can get that off your balance sheet. $2,112. And then your owner's equity, which you get from up here, from your statement of owner's equity right here, and it's $5,051. Do not put the amount on the balance sheet, or on the trial balance, that would be incorrect. So the capital account is $5,051, and then you would total those two. 2112 plus 5051 equals 7163. There still could be some errors, but because equals, you hope that that is accurate. You might find that it's not, but more than likely it is. Okay, and then you would submit your assignment. So just to review, everything we're getting, this is what we do on the last day of the fiscal period. So we take the trial balance, which we've gotten from our account ledger, our general ledger, and we calculate our income statement, which is your revenues minus your expenses, to find a net income. We know it's a net income if the revenue is larger than the expenses, which is what we hope for. Although some businesses do lose the first couple of years, and with IRS you can write off a loss for a couple of years. The next thing we calculate is statement of owner's equity. So we start with our beginning capital, any investments during the month for a total investment. We take our net income that we just calculated, subtract the drawing that they took out for personal use, and that's your increase in capital. And we add that to our investment to get our ending capital for that month, 5,051. Then we create our balance sheet, which shows the condition of your business on a specific date. If you go into a bank for a loan, they're going to ask to see these financial statements, and they're going to look very closely at your balance sheet. So we have 4 assets. We list them in the order that they're found on the trial balance, which is in the order of liquidity. In other words, what can be turned into cash the quickest. And of course, cash is listed first for that reason, then accounts receivable, supplies, and your equipment is the last item that would be listed. Then on the right side, we list our accounts payable, and we only had one liability, so that's the one we listed. And then we list our capital, but very important, get that capital from what you just calculated. Don't take that one off the trial balance. End of this video.